high inflation, what typically happens to the real estate market? Do we see home prices go up because of material costs, or do they go down because people can't afford homes?
No, prices go down. I bought my first home with a 10.5% mortgage only because I went VA, and I paid $34,000 for it. And it was during the Jimmy Carter years, time of hyperinflation, and sold it 2 years later for $74,000. The house went down dramatically in value. It just returned to its original value. And that's generally what happens because interest rates will go up and interest rates will price people out of the market. And in an effort to save themselves, builders will either stop building altogether, and existing home sellers that have to sell will have to sell at extremely low prices in order for anybody to be able to qualify for a mortgage.
Is that true for all over the country? Because you know how there's been a lot of people, including myself, move from blue states to red states because there's hotbeds, where people want to live. Would that be uniform, or is it going to stay hotter in some areas?
Yeah, I would say if we ever entered a time of hyperinflation, like we had during the Carter years, that it would be across the board. Because the one thing that regardless of demand and people wanting to live, we did the same thing you did, that you still have to have an income that can support the house you're buying. So already we're seeing people being priced out of the markets, even in one of the hottest places in the country. I was just reading that Florida is one of the has the top 3 cities out of the top 10. Number 1 is Florida, Orlando, the number 1 place to live and to move to right now. And so even in those kinds of areas, there's huge demand, but they're already starting to lower their prices because people are being priced out. So regardless of what demand is and desire is to live in particular areas, they're going to have to slow down their building because too many people are going to be priced out. They're just not going to be able to afford the mortgage. Now, that's not going to be true with pricing. For instance, lumber is down about 45% this year. So that's getting better. Some appliances, kitchen cabinets, other things like that are starting to come down a little bit in prices, and builders are starting to not necessarily lower their prices, but create some stability in holding fast. But when I guess it was about 6 weeks ago, as interest rates were going up, just a little bit, people were getting priced out because prices were so high for the homes, and a little bit of interest was enough to make mortgage companies think twice before qualifying somebody's income to be able to afford a mortgage. So that's going to happen everywhere. Obviously, the last places to get hurt are going to be, Texas, Florida, Arizona, Nevada, those places where the industry is incredibly strong and hot. But it doesn't matter because the mathematics, even though their demand is high because everybody's moving there, the mathematics is still going to take effect, and people are only going to be making so much income, and they're going to get priced out if we ended up in a hyperinflation time. Hey, remember to click the subscribe button right here on the screen, and don't forget to hit the notification bell so you'll be notified when new content is added. And more importantly than anything, you don't want to miss all 3 live hours of Financial Issues every day from 9 to noon. And you can watch it on FISM.tv. That's FISM.tv.